Welcome to the Real Estate Crowdfunding Show, syndication in the digital age at gowercrowd.com. I am Adam Gower, and just recently I was making a presentation to 100 or so members at the Home Builders Association here in town about raising capital online when one of the attendees, Max Z, asked me if syndication to the general public was legal. Well, Max, this podcast's for you, okay? I am so immersed in online real estate syndication that it's easy to forget that not everyone is aware of it. So my conversation today with guest Mark Roderick, attorney at Flaster Greenberg and one of the pioneers in the real estate crowdfunding industry, focuses on the can you do it and how is it legal aspects of real estate crowdfunding online. Here's what you're going to be hearing about. That you really can raise money for real estate from anyone, anywhere, anytime. How to use the internet to legally syndicate your real estate project. That real estate is, in fact, crowdfunding's biggest success story, and a whole lot more. Plus, if you'd like to see the entire Home Builder Association presentation where I walk you through the exact process for actually raising capital online, the exact system, in fact, in detail that I build for high-end clients, then just go to the show notes page for today's episode at gowercrowd.com and you will find that presentation there. Alrighty, Max Z from the Home Builders Association breakfast meeting. Yes, you can raise capital online for real estate deals. It is legal to do that. And my guest today, attorney Mark Roderick, will tell you all about it. Here he is. Mark, thanks first of all for being with me today. We've spoken a few times before. This is the first time we've done it on video. So it's very nice to meet you. I do like
Very nice to meet you too. At least I can connect the face with the voice.
Right, exactly. The great accent with the fabulous looks. Right, all the price.
I didn't want to say that because I didn't, know how much flattery you can take.
Unlimited.
I'll keep that in mind.
Unlimited. I'm married with kids, so I'll take what I can get. Mark, you really inspired me. We spoke at least a couple of years ago, and you shared with me an incredible insight that the changes in regulations allowing real estate sponsors to raise money online was a marketing opportunity. So I really want to talk to you about that. That's what I'm doing now. I provide, you asked me, I provide marketing and digital marketing and social media services to sponsors to raise capital. But before we get into that, let me ask you one question, and let's address our conversation to those in our audience who still don't know you can do it, right? Is it legal, first of all, to raise capital online? And if so, tell me the story of how that came to be.
No, it's not legal at all. And what's your next question?
What are you doing for lunch? Right, we'll cancel now.
Okay. Well, so my answer is going to go back many years into American history. But then it's going to really quickly come back up to date. So don't think I'm going to go like month to month. But we had a great world depression back in the 1920s, as everyone knows, I believe, or actually, I don't know whether people younger than me do know, but
you were there.
Right. My grandparents lived through it. So I am maybe the last generation that actually remembers we had a Great Depression, not just in this country, but all over the world. And it led to the rise of Nazi Germany and all kinds of bad things. And one of the causes of the Great Depression in this country was that American capital markets had become basically a swamp filled with investor fraud and stock market manipulation and so on and so forth. And when you live in a capitalist country, as we do, and your capital markets collapse, you have a depression. And therefore, one of the as I'm sure all your listeners know, Franklin Roosevelt was elected president for the first time in 1932. And one of the very first things he did, teaming up with a Texas Democrat named Sam Rayburn, who went on to an extremely illustrious career, they teamed up and wrote the U.S. securities laws as we now know them. So it's not a coincidence that all of the securities laws that you read about today, you read on the internet. Well, what laws, affect cryptocurrencies, these brand new digital assets? And people are always talking about the Securities Act of 1933, the Exchange Act of 1934, the Investment Company Act of 1940. It's not a coincidence that those laws were written at that time, because they were written in direct response to the collapse of our capital markets in the late 1920s. And the result is in this country, we got the most stringent, transparent securities laws in the world. And a result of that has been, not coincidentally, we have the most efficient, most trusted, and most valuable capital markets in the world. Okay, so I go back into that history to give your listeners, that person that you referred to who's not sure whether we can do all this, some sense of the history behind the rules. And ever since the 1930s, since the 1933 Act, there have been a few fundamental rules about American securities laws. And one of the most fundamental rules that every young securities lawyer learns at his mother's knee is that there is a difference between public offerings of securities and private offerings of securities. And the difference is that in a public offering, you can advertise let's take an old school company, General Motors, or a new school company, Uber. Those companies can advertise their securities publicly. Here, come buy our securities, they can say in the Wall Street Journal. Mm-hmm. But conversely, a private company, a real estate developer, buying an apartment building in Austin, for example, could not advertise. And everyone knows that. And, instead of advertising, that developer has to know people, or know people who know people, or know people who know people who know people. Very inefficient series of barely connected private networks, basically. Mm-hmm. And so now I'm finally going to answer your question. It is that long-standing rule that was changed in 2012 when then President Barack Obama signed into law the Jobs Act of 2012 on, I believe, May 5th, 2012. And although there's lots of complicated rules included in that law, the single thing that transformed the capital formation industry is a reversal of that 85-year-old rule. So whereas you could not advertise before the Jobs Act, after the Jobs Act, you can advertise virtually any way you want. In fact, when I do a lot of public speaking, and I'll be moderating a panel of lawyers, and I will say, what kind of advertising can you not do under Rule 506C? And people get a little bit of a worried expression on their face, like, don't ask me, but it's a trick question, because there is no advertising that you cannot do under Rule 506C. So I've probably been talking long enough, but you said, how do you go about doing it? As you know, there are three kinds of crowdfunding, and we can talk about those if you want to, but they all have in common the reversal of this long-standing rule. So you can now advertise your private deal publicly.
Right. And so the official term for that is general solicitation, isn't it? You can go to the public in the same way as an IPO can go to the company doing an IPO can go to the public.
General solicitation and advertising. That's what you, for 85 years, were not allowed to do.
Right.
And with one stroke of the pen in the Jobs Act, it removed that restriction.
Right. And it's all to do with securities laws, basically. That's what it's all about.
Securities laws.
Yeah.
Yep. It's the same. The crowdfunding is just a minor in technical detail, though major in impact, change to the 1933 securities laws.
Right. And let's just drill down and to be really, really clear. Some of the clauses, for example, that a lot of sponsors may still have in their contracts are no longer relevant. So, for example, you don't have to, you don't have to warrant or represent that that a sponsor has a pre-existing relationship with an investor, right?
That is correct.
An investor doesn't. Go ahead.
Well, yes. It used to be these private networks. You could only raise money from someone you knew, or someone they knew, or someone they knew. And the technical word. So you've become a lawyer now. I can tell you're not just doing marketing.
Well, I've just been listening to all your podcasts.
You said general
internalized them all.
And now you're using this technical term, pre-existing relationship. So that's what you used to have.
Right.
But no longer in the world of post-Jobs Act world, you can, bring in any investor from anywhere. So just, I always get a chill when I say this, even though I say it all the time, is that back in the pre-2012 world, all the clients I used to represent, they had to go, looking for money, make phone calls and go to meetings after meetings and on and on. And today, I always say, no, I'm going to get a chill. But as you know, if you want to raise money for real estate, Adam, you say, God, I just had a great idea for a business. As soon as we get off this podcast, you can put up a website and you can theoretically reach every investor in the world. So I got that chill, but that's what it's all about. So far from having to have a pre-existing relationship, you can get money from anyone, anywhere.
All right. So tell me a little bit about the story of how you came to this and how it occurred to you that this was a marketing opportunity.
Well, so I have been practicing law since roughly 1840, as I always say. And in the course of practicing law, what I have always done is represented entrepreneurs and in everything they do. And one thing entrepreneurs spend a lot of time doing is trying to raise capital, right? Because every entrepreneur needs capital.
Mm-hmm.
That's why they call it capitalism, because capital is what runs the machine. So I have been involved in helping entrepreneurs raise capital since forever. And when I saw the Jobs Act on the horizon, I said to myself, wow, we will be able to advertise. And what that means is that the internet is coming to the capital formation industry. That was the observation. I don't even want to call it insight. And by that time, the internet had already come to a number of industries. Retail, as an example, the travel industry, the book selling industry, all these industries. And when the internet comes to an industry, it always does the same thing in an industry specific context, but it also always directly connects buyers and sellers and over the head and displacing all the middlemen. And if you think about what you and I both know about what the capital formation industry used to be, that series of disconnected networks, those are all middlemen. I say that in Manhattan, from the East River to the Hudson, that's just middlemen. All those people are just middlemen.
I see.
And knowing what the internet has done to all these other industries, I said to myself, wow, that, I mean, books, yeah, that's a big industry, but capital formation, that is a multi-trillion-dollar a year industry. When the internet hits that industry, you are going to see some real disruption. So that's when I decided, hey, I'd really like to get into this business. And then it immediately became apparent that, there's a billion websites out there, probably more. I don't know. There's probably 100,000 more every day.
Mm-hmm.
And a lot of them have really cool stuff on them, really interesting stuff. So I said a few seconds ago, you could put up a website today to raise money for a business, but man, you are competing with a billion websites. And a lot of those websites, I'm sorry, but they have photos of really attractive people on them. So you got to compete with that. And that's when I realized now we've gone from a world of only being able to talk to 6 people to raise money. Now we're going to be able to talk to a world of 6 billion people. But how is my voice going to be heard in all that commotion? And that's when I started to say, and must have said thousands of times since, crowdfunding is a marketing business. So I would go to speak at the early crowdfunding conferences. There would be lawyers there, website developers, people like that. And I would say, where the heck are all the marketing people? Because the legal stuff, frankly, fortunately, there are technical rules. So people have to hire me, and someone has to develop a website. But that's the easy part. Mm-hmm. What you do is where the value is. So it was immediately apparent to me that getting your message through the din of a billion websites, that's what online capital formation was ultimately going to be about.
Now, you represent real estate sponsors, real estate developers in their securities laws or the security laws aspects of their fundraising, their capital raising. What have you seen in terms of the way that they have begun to adapt to this new environment, to this new opportunity to raise capital online? Because it's a fundamental shift, isn't it, Mark?
It absolutely is. Just a couple thoughts there. One, as you know, when crowdfunding began, no one was thinking about real estate. Nobody was thinking about real estate. Because this is a new internet phenomenon, people thought, oh, this is Silicon Valley. These, now we're going to put the next Facebook or the next Instagram on, you could be able to invest in it. Nobody thought about real estate. I wrote a blog post soon thereafter thinking, saying, maybe real estate would be
That's right.
pretty good thing. And not because of my blog post, but just because of the inherent nature of the animals. Suddenly real estate became and continues to be the by far huge success story. And of course, we think, no one knows for sure, why has real estate been so successful? And nothing else has really been successful. We think it's because when people are investing online, they see an apartment building, that apartment building in Austin. They know what apartment buildings are. Everyone's been a tenant at some time. They know about rent. So they think they understand it. Whether they do or not is a different question, but they think they do. And so they're willing to invest. But I have another idea. I mean, I think that's absolutely true. What we have seen, so crowdfunding is a new thing. And to go from doing things the way you've always done them to doing something completely new requires a certain kind of person.
Yeah.
Lots of them live in California. Lots live in New York. None live in Philadelphia, just about, which is where I am. Okay. But if you think about in the business world, who is really, really entrepreneurial? And the answer is real estate. Real estate folks are cowboys. Real estate folks are risk takers as a general proposition. And so it may be that that's another reason why real estate has migrated so successfully from offline to online. They were just willing to do it. And the results have been amazing. Going in the beginning, people were doing a little single family fix and flip and raising $120,000. A couple of months ago, one of my clients raised $14 million for a single real estate project.
Isn't it incredible? And did you see one of the websites raised, one of the marketplaces raised 5 million in 3 minutes last week, they announced.
There you go.
That's extraordinary.
And of course, success begets success, because when real estate developers out there start hearing the stories like the one you just told, their ears perk up. What?
Right.
What? $5 million, 3 minutes? What? But 3 million in 5 minutes? And so it's a success that feeds on itself.
Right. But so let's kind of drill down on that idea a little bit, because we know that approximately 900 million has been raised using Regulation A+. We don't need to get into the weeds of the different regulations. If anyone's interested, they can give you a call, right, to get into the details of that. But you've already mentioned that this is this is the biggest industry in the world, right? I mean, this is multi-trillions of dollars. I don't even want to guess how much. So 1 billion, if that's what's been raised in Reg A, for example, is just barely scratching the surface, isn't it? So
yes.
So although it has outstripped other industries, it still has an enormous way to go. And one of the things that you mentioned was that taking marketing online is something very, very different. But my question to you is it really? Right? I mean, is it actually something really very different?
Well, and you know what? That is a question that I would turn around and ask you, because
right.
As I'm serious, because as I always tell people, I am just the boring corporate securities lawyer. The value lies in the marketing. So I will ask you, is marketing a real estate apartment building in Austin online, is that different than marketing soap? How is it different?
Well, it's not, in terms of marketing soap, what I meant was it's actually the exact same as marketing the old way, only it's done online. So the same process has to be engaged, right? So if I'm meeting you for the first time and I've got a deal at Walk and Crosswalk, the first thing we're going to talk about is who am I, who are you? We'll get to know each other. We might have lunch together, right? The old way. And over time, you'll get to know me and you'll come to like me and eventually trust me enough to send me a check, right, for the deal if the numbers make sense. Online, it's the exact same thing. You still have to establish a relationship with a prospect. You just do it in a different way online. I mean, that's really the fundamental difference. But what I was interested to know is, what have you seen in terms of your clients who have adopted this? I mean, for example, your client that raised 14 million, I'm assuming that they used digital marketing in some way. They went online and they did it. So what was it for them, in your experience, right? Or for other clients that you have, that has enabled that mindset to go from the old way, right, the traditional way, to adopting, that you use your phone basically now to communicate? So what makes them? Yeah.
I mean, this client, and this is kind of fits in with what you said. One, they raised the money through one of the marketplaces, CrowdStreet. CrowdStreet, as you know, has a large pool of online investors, but this $14 million raise was their third offering on CrowdStreet. And so maybe what's happening there, you talked about you and I meeting, going out to lunch. Maybe what has happened is that sponsor has formed a relationship, essentially, with these investors, and things went well in the first deal, things went well in the second deal. So by the time you got to the third deal, investors were just saying, where do I sign? And then, of course, there's this weird herd mentality that, I think has always been there in the investment community. Everyone wants to jump on something that they see other people jumping on. And I think you're seeing some of that now in the online investing platform. For example, the situation you just said, they raised either 3 million in 5 minutes or 5 million in 3 minutes. In either case, those investors were not, during those precious few minutes, carefully analyzing the deal and looking at the pro forma and just speed reading, blah, blah, blah. They were engaged in some other kind of psychological behavior. So I guess when you're marketing these deals, that's the behavior that you're trying to, stimulate.
Right. So I'll tell you what. Right. So you're absolutely right. So you are extremely humble in pointing the question back at me, right? How do you market? But you're actually a superb marketer as well. And I remember discovering your name when I first discovered crowdfunding, I don't know, 3 years ago, however long ago it was. And it just popped up. So I always find that case studies are a great way, right, for sponsors that are listening here today. That obviously you're a credible fellow, you know what you're talking about. How is it that we met? How did you get your name and your story out there when you first discovered the opportunity of crowdfunding?
Well, I mean, I've been accused of being incredibly good looking and athletic. Yeah, and I can understand all those things, but I've never been accused of being a great marketer. And I'm really not in any intentional way. But this is what happened for me. I saw this, interestingly, I think this is important to note, I didn't see crowdfunding as a business opportunity. I saw crowdfunding as something that was incredibly exciting and also something that was an incredible social good, having to do with the democratization of capital and letting entrepreneurs have access to capital no matter where they lived and where their father was, or whether he was in their lives, or all these other things, and giving ordinary Americans access to great deals. So I saw it as an exciting project and one where there would be enormous social benefits. And I therefore became sort of, and still am, evangelical about it. And I started to write this blog, which may well be where you, and it turned out that I had a skill at blog writing. I'd never done it before, but my point is, I think that my personal enthusiasm comes out in the blog and when I do public speaking, which I do a fair amount. And it is actually that completely sincere personal enthusiasm rather than any particular marketing message, that would be crafted through focus groups and so forth. I think that has been my claim to fame in the crowdfunding space. And that too is a virtuous cycle, because the more people I speak to, the more I learn, and the more I have to offer. And so it's been a real eye-opening lesson for me that when you really believe in something and are enjoying what you do, it seems to rub off. It seems to affect people.
Right. And authenticity is the word that springs to mind.
Okay, there you go. Right.
Just being really authentic in who you are and what you believe and what you're passionate about and what you really love. And if you're a sponsor and you really enjoy what you're doing and you just talk about it, right? The good, the bad, the indifferent, the good experiences, the bad. It's really compelling online. And that's why it's no different from meeting someone for lunch.
Yep, that's right.
Conversations.
I guess in my blog, I meet hundreds of thousands of people for lunch.
Yeah.
It also so happens for me. So again, I've been practicing law for a long time and representing entrepreneurs doing lots of different things. I started life as a tax shelter lawyer way back when. It just so happens that everything I've done in my career, all the contracts and mergers and acquisitions and all the operating agreements and tax planning, all of that somehow becomes relevant in representing real estate sponsors. And so I'm actually bringing to the table, in addition to the crowdfunding expertise, all these other things that I didn't do those things planning. Someday I'm going to use them in crowdfunding, because crowdfunding didn't exist.
Right.
It just so happens that that's how things have worked out. So that has also been tremendously useful to me. How about you? How did you get into the space initially?
Okay, before I tell you that, you reminded me of something though. When I was at school, we had to study Latin. I went to classic school. It was called in England public school, right? Which here was
I'm very familiar with it. Yeah.
Latin was mandatory, and I've still got to figure out how that was ever of any relevance to anything in life. I've no idea. I've been waiting for that, right? To all right, that's why I learned. Other than Asterix and Obelix. Have you ever read those, Asterix and Obelix?
No.
Cartoons, they're fantastic. They use a little Latin in there as well sometimes. I came to it because I was working on a major senior housing project with a multi-family office. And one of the principals of this office wanted to increase his portfolio from the mid hundreds of millions to the billions. And the two families were unable to do it themselves. And he asked me, what about crowdfunding? I thought, I don't know, what is that? But what intrigued me the most, and this is a while ago now, obviously before we met, was that he didn't know what it was either. And I thought, here's this incredibly successful fellow who is intrigued and doesn't know. So I took it upon myself to do some research, and that's how I found you. So let me ask you then, where do you think, Mark, where do you think this is headed? What do you think in 10 years' time, or ultimately, what do you think this industry is going to look like?
Well, I analogize it to all these other industries that the internet has penetrated and disrupted. So it will continue to expand as more and more investors become aware of it, more and more sponsors become aware of it. In my $14 million deal, there were something like 280 investors, which is great. Mm-hmm. I believe at the sites like CrowdStreet, Real Crowd, the big successful sites, I think they might have a couple 100,000 accredited investors signed up. There's like 8 million accredited.
Exactly, right?
In this country. So we are talking about they are scratching the surface. But as sponsors become aware of raising $14 million, more and more people are going to come in to the industry, which will be great. I think within a short period of time, just as when we're going to make a travel plan now, if I'm going to go out to visit my sister in California, I'm going online. I mean, it doesn't occur twice. And I think in the real estate field particularly, it's not going to be long before a sponsor thinks first about going online to raise capital, just as a natural move. I'm hopeful that it moves from the accredited investor only world into the Reg A non-accredited investor world. As you've noted, the Reg A world so far has been much less successful than I think many of us thought that it would. The Reg D world, accredited investors only, is so much more successful. So I think that's going to happen. Now, with that said, the internet, what the internet does is drives out inefficiencies in markets. I said that it displaces middlemen. That's a different way of saying the same thing. It drives out inefficiency. At some deal size, I don't know what it is, exactly what it is, but the world of $100,000 deals is extremely inefficient.
Mm-hmm.
The world of $14 million deals is still inefficient. So crowdfunding can grow beyond there.
Mm.
The world of, let's say, $1 billion real estate deal,
Mm-hmm.
that is an efficient world. It's already efficient. Everyone knows who all the players are. Everyone has access to information. There are experts out there. That's an efficient market already. So crowdfunding, I think, doesn't have a role to play in that market. I don't know where the line is. We haven't reached it yet, and given that we've only penetrated less than 10%, even of the accredited investor market,
Right.
we have a long way to go. But there does become some point where crowdfunding is not adding any efficiencies to the market, which is fine. All of us want is efficient markets, and if it's crowdfunding, great, and if it's not, great.
It'll reach its maximum potential, basically.
It will, yeah. It has a long way to go. As I'm in the industry, it looks great to me. When I speak at conferences, I'll say, from our end of the telescope, kind of the industry end, things look great. If you get on the other side of the telescope from the investor side, it doesn't look that great still. It's, the websites aren't great. The process isn't great. There's no standardization. No one is really reading the legal documents. So what's the point of all this legal disclosure if no one's looking at it? So if you look at it through that end, there's a lot. We're still, I think, in version 1.0. We have lots of versions yet to develop. To
go through, yeah, including the one that will be forged during the next downturn.
Whew. Are there such thing as real estate downturns?
Keeps on going up.
But I will tell you, Adam, it's really, on the marketing side, that is going to drive what the future of crowdfunding is. You're going to drive it a lot more than, I may prepare standardized legal documents and all that stuff, but you marketing folks are really going to drive what crowdfunding becomes. And that can be for good or bad. REITs have been around forever. REITs kind of were supposed to be crowdfunding a long time ago, and they took a wrong turn. Private REITs became just not good investments, high commissions. And I've always been concerned that crowdfunding could take that same kind of turn. I speak with lots of people, and I've spoken with some bad people who have been trying to kind of turn Regulation A into a boiler room. They tell me, well, we don't care what the deal is. We can sell anything. Well, yeah, that's not what I want crowdfunding to become.
Right. There's a lot of responsibility in
there is
real estate, especially when you've got as long a history in real estate development and finance as both of we have.
Yes.
These are very complicated deals that have good upside, but definitely downside possibilities.
Yes.
And so I feel a deep sense of responsibility to the people that I market to on behalf of clients, and only work with clients like you do that I feel have high integrity and are really doing the very best that they possibly can to be successful, like you say, not just running boiler rooms. Mark, let me wrap up with 3 sign-off questions, if I may. Right, so I'd love to talk to you for longer, but in respect of your time, 3 questions that I ask all of my guests and will eventually syndicate in videos and gosh knows what later. Okay, sign-off questions. First of all, for a real estate developer who is just starting out as a result of this conversation, watching this podcast, deciding that they want to raise money online, what's the most important thing that they should keep in mind?
Yeah, the most important thing is that, I'm going to say it again, crowdfunding is a marketing business. That's the most important. That's the first step to get in your brain. You know, I still get calls from many people who, you know, they've been furiously reading my blog about Regulation A. Oh, we can raise $50 million, and this is how we do it. And what are the rules? And can we do testing the waters? And the first question I ask is, well, do you have any reason to think you can raise the money?
Right.
And you'd be surprised how many times there's silence on the end of the phone when I ask that question.
Right.
You know, people get the impression that all you have to do is become an expert on the legal rules, and that means you will automatically raise $50 million. And that's not what it means at all, which is why I will usually say, the lawyer is not the first person you should speak with. Or I'll give you just some basic rules, but you got to talk with a marketing person. That's literally what I say many, many times, because can you raise the money? That's the question.
All right. Second question. In your experience online, what has been the hardest lesson you've learned online?
Yeah. Same. This is boring, but it's the same thing. It is not build it and they will come. I have clients who have done Regulation A offerings, through me, in which people had, folks had an incredible track record. I personally invested $100,000, just I'm going to demonstrate. I'm telling you that these are people that I believed in. This was fantastic deals. They were not successful raising money. It is hard to raise money. Now, I've had many other clients who have been successful, but that has been the big lesson, that a great deal is not enough. Now, that's in the Regulation A world. In the Regulation D world, I just want to say, if you are a successful sponsor, if you are successful enough, experienced enough, get on one of the, get on CrowdStreet or Real Crowd, that's the ticket, because they have the investors signed up already.
Is it enough though? I mean, do they fully capitalize every deal that's on the site? I mean, to me, I spoke to Higelke actually at CrowdStreet for the podcast a couple of weeks ago, and he was very encouraging of sponsors to have their own digital presence as well, because the first thing anybody does online, right, when you hear a name or you see a company name or the name of a principal, is you do a Google search. You want to be able to figure out who the person is and what they do, and understand that they are credible, right? And learn about them and establish that relationship.
Yeah, I think the answer to your question, is it enough to get listed on CrowdStreet or Real Crowd? I think the answer is sometimes it is, sometimes it isn't. But being listed on one of those sites is a heck of a lot easier than, starting from scratch and just trying to invest, attract investors to your own website, as opposed to the billion other websites out there.
Last question. What are the key daily habits that you have that you feel make you successful with your digital presence or online activities?
I have found brushing my teeth is extremely successful in this world. It seems to really bring in the readers to the blog. No, actually, just being aware of developments in the field and having being aware, percolating in your brain what's going on in your field and thinking a little more deeply about things than other people do. In other words, it's easy to report, well, today the SEC released this thing. Wonderful. I can find that on, 400 other places. But to write about things with some thought, for example, Facebook, big news, Facebook comes out with its cryptocurrency. So I thought about it for, a few days and then wrote a piece about it that, people may think, yeah, you're absolutely wrong, Mark, about what you say about this, but I'm saying non-obvious things. So, I think in every industry, I think in your industry, anyone can think of, any marketing guy can think of some things, but as a daily habit is to spend the time and energy to think things through more deeply. That's what I would say. And
Lovely.
Personal hygiene right there at the top of the list.
Right. You can't have a bad breath online. Mark, it's a pleasure as always. Thanks so very much for your time today. Real pleasure.
Thank you, Adam. I always enjoy speaking with you.
That was Mark Roderick, attorney at Flaster Greenberg and world expert in all matters legal relating to real estate crowdfunding. Well, now you know that real estate syndication can be conducted online legally as per congressional legislation from 2012. And you know that you do not need a pre-existing relationship with a prospect to solicit investment from them. So now it's time to get online and start raising money. And by remarkable coincidence, I have put together a whiteboard workshop that shows you exactly how to do that. Just go to the show notes page for this episode at gowercrowd.com and sign up there for immediate access to the workshop. It's totally free and it will be the most valuable thing you can watch all year. Okay, that's it for today. Thanks for listening and thank you, Mark Roderick, crowdfund attorney at Flaster Greenberg, for your time today. That's all for this episode. I'll see you next time, and for now, this is Dr. Adam Gower signing off.